A great presentation can be the difference between success and failure. The difference between a good presentation and a great one? That's Canva. Canva brings your ideas together in one place with one powerful app. Use AI to move faster. Collaborate easily because great things happen when people create together. No wonder 95% of Fortune 500 companies use it. Canva lets you bring your big ideas to life as fast as you can think of them. Put imagination to work at canva.com.
These days, AI can help you adopt better time management, but it can't stop colleagues booking meetings during lunch. But how about being able to easily adopt industrial AI to streamline your business? Siemens Accelerator helps you find the right AI providers and easily understand what they offer, so you can use modular solutions to quickly scale up and grow your business. That's AI for real, from the global market leader in industrial AI, Siemens. Learn more on usa.siemens.com/AI.
Running small and medium-sized businesses is hard work. Business owners need to be sure their ads are working just as hard as they do. Amazon streaming TV ads makes your marketing dollar work harder. With Amazon ads, trillions of insights help small and medium businesses reach the right customers that matter. Your ads will show up during the shows the people are actually watching, and measurement tools show you what's working the hardest. Gain the edge with Amazon ads.
Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Daybreak Weekend, our global look at the top stories in the coming week from our Daybreak anchors all around the world. Straight ahead on the program, a look ahead to this week's long-awaited interest rate decision from the Federal Reserve. I'm Tom Busby in New York.
I'm Caroline Hepker in London, where we're looking ahead to President Trump's second state visit to the UK.
I'm Doug Krisner with a preview of next week's rate decision from the Bank of Japan.
That's all straight ahead on Bloomberg Daybreak Weekend. On Bloomberg 1130 New York, Bloomberg 99.1 Washington, D.C., Bloomberg 92.9 Boston, DAB Digital Radio London, Sirius XM 121, and around the world on BloombergRadio.com and the Bloomberg Business app.
Good day to you. I'm Tom Busby, and we begin today's program with a decision on rates from the Federal Reserve this Wednesday. All signs point to a 25 basis point rate cut. But could the central bankers go even bigger? And how does the Fed see inflation, the labor market, and other fundamentals of the U.S. economy? For more, we're joined by Michael McKee, Bloomberg International Economics and Policy Correspondent. Well, Michael, thank you so much for being here. Let's just start with what you expect the Fed to decide this week, how you think sentiment will be split among the voting members of the FOMC, and what does the Fed see as far as inflation, their dual mandates of inflation and the labor market?
Well, a lot of interesting questions there, which is something that I hadn't been able to say going into a lot of Fed meetings in recent months. The Fed is probably going to do its 25 basis point cut. The data that have come in suggests that the economy is weakening on the labor mandate side, still an issue on the inflation side, which will keep them from doing 50 basis points. But the question is, what do they do after the September 17th meeting? And that's where we may see some market moving or things that will cause the markets not to move, if you get what I mean, in the sense that if the markets are expecting something, there's a potential for surprise. And that is, what do they think the path is going forward? Is the inflation that we got this past week enough to warn them off of saying anything specific about October and December, those Fed meetings? And what does a dot plot say about next year? And the path of rates going forward? Do they lower the terminal rate? Do they say that rates are going to go even lower than the markets had anticipated, which they have said is about 3%? So there are a lot of open questions out there that people are going to be asking, and the idea of what they think about inflation is going to be a good question for Jay Powell.
Well, let's talk about inflation, because this last week we got a couple of reads. We got Producer Price Index, which actually surprised to the upside a little bit, not much, down 0.1%. Consumer prices, though, a little bit hotter than forecast. Higher costs for housing and, of course, food. Not good news for this president, who insists that food prices have been plummeting on his watch. What were your big takeaways from that CPI read in August?
Well, there is a political component to it in that food and gasoline prices were up significantly, and so that's not going to be a good look for the president. But what was really interesting is it wasn't so much the goods prices that went up as the services prices. The goods prices we expected to rise because we thought that tariffs would leak into the data. But things like furnishings, household furnishings, only up 0.1%. Toys were down 0.8%. But we saw service prices, particularly for things like airline fares, lodging away from home, those went up significantly. And if service prices are going up, unrelated to tariffs, that's an inflation problem that the Fed will have to address in a different way than the way they would think about it in terms of tariff-driven inflation. So they're going to have to keep a close eye on this, which is why I think, to answer my own question that I posed about what do they do for October and December, I think they kind of punt on giving serious guidance on that because they'll want to see more data between now and then.
Did you see any other good news as far as inflation?
Yeah, in some areas of service prices, medical care services were down 0.1%, recreation services down 0.2%, and people thought that those would be areas that might rise because they had risen in previous months' service price increases. In this case, they did not. So it's not an easy thing to say what is causing the service price inflation to rise, and that's something the Fed is going to want to investigate.
Well, let's talk then about the labor market, which every sign we're seeing it continues to weaken. And just this past week, we got a near 4-year high on jobless claims. What's your read on that, and what does the Fed see?
You need to take it with a little bit of caution because the last week before this past week when the jobless claims were tallied was the week with Labor Day, and a holiday is always difficult to seasonally adjust for the Department of Labor because the holidays move around. So in this case, we can look at it with a sort of a jaundiced eye, say this is something to worry about if it continues.
The Fed's two-day policy meeting kicking off this Tuesday, a decision Wednesday followed by a Jerome Powell press conference. Our thanks to Michael McKee, Bloomberg International Economics and Policy Correspondent. We move next to corporate earnings from the shipping and logistics giant FedEx coming out on Thursday after Wall Street's closing bell. Just ahead of the industry's peak holiday shipping season, how are rising costs, worries about U.S. consumer spending, and the end of de minimis exemptions on small package shipments into the U.S. all impacting the company. For more, we're joined by Lee Klaskow, Bloomberg Intelligence Senior Transport, Logistics, and Shipping Analyst. Lee, thank you so much for joining us. FedEx coming off a very solid earnings beat for the spring's fourth quarter, saying it successfully slashed $4 billion in costs. It plans to cut $1 billion more this fiscal year. But FedEx and the whole industry now facing a lot more headwinds. So what are you expecting to see in this week's earnings results?
Yeah, it's going to be tough. They're facing a lot of headwinds. A lot of those headwinds are related to the kind of more protectionist stances from the Trump administration. One of those, which actually had bipartisan support back in the Biden days, was getting rid of de minimis exemptions, which really allows lower valued goods to be imported into the United States without facing any duties or tariffs. And that floor was at $800. And so what that did is allowed a lot of e-commerce providers outside the United States to directly ship to consumers. So, if you bought that that skirt or T-shirt from Shein or something off of Temu or even off of the Amazon marketplace, some of that stuff might have been originated in China, and it's going into the United States and kind of avoiding custom duties because of that loophole. And they got rid of that loophole for imports that are going into the United States from China and Hong Kong in May. They also got rid of that loophole for everyone else at the end of last month. So we're really going to start to see the impact. And FedEx kind of doesn't report on a calendar basis. They have their own physical basis. And, we heard from UPS already, and they said, for 2 months of their quarter that they reported, which this will be included in FedEx earnings, is that, their China to U.S. business was down pretty significantly. And we expect that read through to apply to FedEx as well. And then, FedEx is also dealing with, a weaker industrial economy. People don't really think of FedEx as a trucking company, but they're actually the largest less than truckload provider. That's a business that they're looking to spin off, but they still operate it. And it's really tied to, industrial production, the ISM, and the ISM has been, contraction territory for, I believe, 31 out of the last 33 months. So, that's going to definitely weigh on tonnage. So, volumes are really facing headwinds, whether it's their international parcel business, or their, less than truckload business in FedEx Freight.
Now, these are big changes, right? I mean, we could really see a significant hit to earnings. Maybe not in this report, but certainly in the next one.
Yeah, I think all eyes will be on, any guidance that the company is able to offer. Companies in my world have been less apt to provide guidance, at least longer term guidance, just because of the uncertainty tied around the trade policies out of Washington, which has created a significant amount of volatility and uncertainty. We'll see kind of where management thinks they're going to be. My guess is that they probably will provide, if any, insight maybe into their second quarter. Just again, given that everyone's crystal ball is quite foggy and cracked right now.
Yeah. Well, let's talk about something you brought up is the possibility of spinning off FedEx Freight. But FedEx had a couple of initiatives, Drive and Network 2.0. How have the company cut costs and shed businesses? How has that impacted the business? And what is there left besides FedEx Freight to cut?
Yeah, so looking at FedEx as a whole, they're doing a number of initiatives, like you mentioned, Drive or Network 2.0, that are trying to take out costs of the network. Because what they really need to do is they really need to restructure their networks to the new reality. The old reality would be 100 envelopes go to a lawyer's office, and that FedEx driver would pick up another 100 envelopes to be delivered, and that kind of density really helps with margins. And fast forward to today, we're all buying things from Amazon or wherever, and we get one package per day, and those deliveries are extremely expensive, and that's been really weighing on margins. So we're not going backwards, we're going forwards. There's probably just going to be more B2C traffic relative to B2B traffic, and so they're making changes, and those changes include increasing automation, reducing overlaps in networks. They're combining, slowly combining their ground and air networks, something they've been really, they pushed back for a number of years about doing, and they're finally now leading into that. And what I would say is that some of the benefits that they're generating from these changes, we're probably not going to really see them that much, because to really see them, you need good volume growth. You need that operational leverage that you're going to get. So I suspect, when things do turn around, again, the big question is when, you are going to see that flywheel start operating, and that operating leverage generating better margins than they are today. But the problem is that FedEx and its competitor UPS kind of are show me stories, because they're both undergoing these kind of restructurings, and we really have to see how these companies look coming out of these restructurings, and from an operational standpoint when I'm talking about restructurings, and then also B, what does that new network from a profitability standpoint look like when volumes are back on track for growth.
Well, a lot to look forward to. FedEx fiscal first quarter earnings out this Thursday after Wall Street's closing bell. Our thanks to Lee Klaskow, Bloomberg Intelligence Senior Transport, Logistics, and Shipping Analysts. And coming up on Bloomberg Daybreak Weekend, President Trump heads to the UK. I'm Tom Busby, and this is Bloomberg.
How many vendors does it take to meet all your organization's food needs? Just one. EasyCater, the workplace food platform that lets teams order from a huge variety of restaurants, over 100,000 nationwide, all through a single vendor. In addition to all that variety, EasyCater also gives you full visibility of your organization's food spend with invoicing, centralized reporting, and seamless integration with expense management systems, all on one platform. EasyCater, your business tool for food. To learn more, visit easycater.com/podcast.
Introducing the all-new Adobe Acrobat Studio, now with AI-powered PDF spaces. Do more with PDFs than you ever thought possible. Need AI to turn 100 pages of market research into 5 insights with a click? Do that with Acrobat. Need templates for a sales proposal that'll close that deal? Do that with Acrobat. Need an AI specialist to tailor the tone of your market report to sound real smart in real time? Do that with the all-new Adobe Acrobat Studio. Learn more at adobe.com/do that with Acrobat.
Your next product launch is coming fast. Don't let billing slow you down. Legacy systems can't handle usage-based billing. That means your team is stuck gluing code together, piecing through spreadsheets, and running ad hoc queries just to figure out what to bill. With Metronome, you can roll out new pricing in minutes instead of months, whether it's usage-based, seat-based, or a hybrid model. Visit metronome.com to see how companies like OpenAI and Anthropic launch billing as fast as they launch products. That's metronome.com.
This is Bloomberg Daybreak Weekend, our global look ahead at the top stories for investors in the coming week. I'm Tom Busby in New York. Up later in our program, a look ahead to a monetary policy decision from the Bank of Japan. But first, just a few weeks after President Trump's personal visit to Scotland, he's headed back to the UK, where he's expected to mix royal mingling with important geopolitical discussions on a 3-day trip. But the visit takes place under the shadow of the sacking of Peter Mandelson as the UK's U.S. ambassador for previous links to disgraced financier Jeffrey Epstein. For more, let's go to London and bring in Bloomberg Daybreak Europe anchor Caroline Hepker.
Tom, Britain's ambassador to Washington, Peter Mandelson, has recently been removed from his post after further revelations about the extent of his relationship to the late paedophile financier Jeffrey Epstein. That decision comes only days before President Donald Trump's state visit to Britain, the UK ambassador to Washington usually playing a key role in those events. And it complicates what is an already carefully choreographed few days. It's an event that will be important to UK Prime Minister Keir Starmer, who has prioritised good relations with Donald Trump since taking office just over a year ago, stressing the importance of Britain's defence and security alliance with America and taking care not to openly criticise Trump's tariff policies. When Starmer visited the Oval Office back in February, he brandished the King's invitation to Trump, which the US president called an honour, describing King Charles as a beautiful and wonderful man. Those overtures appear to be paying off, at least in part. The UK became the first country to sign a tariff reduction deal with the US in May, with some of it already implemented. However, some tensions remain. For example, steel is an area of issue. UK officials are still working to secure a deal that would remove the 25% US tariffs on the sector as talks drag on for months after Prime Minister Starmer and President Trump agreed a broader tariff cutting plan. There are also geopolitical issues too, with the potential to spark turbulence in the so-called special relationship. The US ambassador to Israel said last month that the UK and France have handed victory to Hamas by announcing intentions to recognise a Palestinian state. The visit also takes place during a testing time at home for Starmer. He's facing scandal within his own party and he's battling challenges from the right-wing party Reform UK, who have proven popular in the polls. The group's leader, Nigel Farage, recently visited the White House at the invitation of Donald Trump. Bloomberg's London bureau chief, Ruth David, explains why that trip spoke volumes.
That photograph of him standing with President Trump, I mean, a photo speaks more than all of the reams of coverage, right? To have that kind of backing and to have that kind of support globally. We saw Tony Blair going to the US. We're seeing Nigel Farage. And the question is, where is Keir Starmer? And I know Donald Trump is coming to the UK later. But it definitely seems to be like Farage is riding on a high.
That was Bloomberg's Ruth David speaking there to Bloomberg's Tom McKenzie and Guy Johnson. So will the honour of a royal banquet be enough to curry the favour of President Trump? Is something I've been discussing with Bloomberg's political correspondent, Ellen Milligan. Ellen, just firstly, what are we expecting to see President Trump do on this second state visit that he's paying to the UK?
Yes, I mean, this has never happened before. The only other US presidents who have had a state visit were Barack Obama and George Bush, but no other president has had two state visits. This one will be a bit different from the last. First of all, it will be hosted by King Charles. The last one in 2019 was obviously hosted by the late Queen. The other big change is that it will be primarily hosted at Windsor Castle because Buckingham Palace is undergoing renovations. So there will be the usual traditional state banquet, the exchange of gifts between the King and Queen and the President and the First Lady. Usually they have some kind of private meeting, either over lunch or tea when the President first greets them. Then they'll have this banquet where we're expecting a lot of famous businessmen and celebrities, as well as the broader royal family to be there, like Prince William, who Trump has also met before. And then after all that pageantry, there'll be the political portion where Trump goes to visit the Prime Minister in his countryside estate at Chequers for a bilateral meeting.
Huge opportunity then for the UK to be front of the queue, to show off what they, want to offer, I'm sure, in terms of business ties. Keir Starmer will surely be trying to use this as kind of bargaining power. What do you think is going to be his main message?
Yeah, I mean, the Prime Minister is effectively using the King as his chief diplomat, and it's already paid off for the UK. I mean, you'll remember the moment where Keir Starmer visited the White House in February and brandished this letter hand-signed by the King himself, inviting the President over to the UK again. That, I think, in large part has been why Trump and Starmer have managed to establish a close relationship despite their political differences. And, the UK was the first country to sign a trade agreement where they avoided the same level of severe tariffs that other allies did. Trump was also hosted by the UK in Scotland a couple of months ago. That was a private visit, but had very much a political element where he was mostly promoting his golf courses, but also had a meeting with Starmer and with the EU's von der Leyen while there as well. So it's already paid off for Starmer. I think he's hoping that other deals could be struck, potentially on tech, potentially on AI, although this state visit will mostly be about the royal element rather than the political one.
Yeah, absolutely. It seemed, I think, to many observers in the UK, a bit like a Netflix movie. Letter to the King could have been the title. And it was also seen as quite a savvy move by the British Prime Minister, by some voters, because President Trump's still deeply unpopular, isn't he, amongst a lot of voters? And yet there's also an edge to voters in the UK that they understand the UK has to try to do well by, obviously, its biggest ally in the world. In terms of how we should expect then the negotiations to go, do you think that there are going to be specific things that Starmer can perhaps gain from this, maybe on steel, as you say, which has still got levies from the US? I mean, Britain managed to get what has been seen as a better trade deal than a lot of other countries.
Yes, that was the big element on steel that was missing from the trade deal that they signed back at the G7 in Canada a couple of months ago, and that still hasn't been resolved. We've now got a new business and trade secretary in the UK, and I know that the government is pretty desperate to get that sorted. Whether that will happen at next week's state visit, I think I'm not hearing much optimism on that. The briefings are more around a kind of a agreement on quantum or AI or tech, some kind of deal in those areas. And there's been reports that various tech billionaires are coming over with Trump to join him in the state banquet as well. So I think the focus will be on that.
Dangers. What are the dangers in this state visit? It lasts several days. I mean, we're expecting some level of protest by some groups in the UK, and also it's a double-edged sword, the relationship, a close relationship with President Trump. We've seen some global leaders humiliated. I suppose, what are the pitfalls people are thinking about?
There are actually a lot of dangers, and the government officials I've been speaking to who have been involved in the planning for the state visit are really, really worried about it. The primary thing is that just days after Trump departs, the government is expected to recognise the state of Palestine at the United Nations Assembly. The UK-US approach to Israel is one of the big opposing differences, and the US administration, including Marco Rubio, have very much condemned the UK and France's and Canada's plan to recognise Palestine. So that will be, a moment of peril potentially if that's brought up. The other thing is Trump isn't afraid to insult various political allies of the Prime Minister. Even in Scotland, he was asked about London Mayor Sadiq Khan and made very disparaging remarks, which Keir Starmer had to interrupt and remind the President that he was a friend and political ally of Keir Starmer's. And there are other elements as well. On free speech, for example, this is something that J.D. Vance has lectured and tried to school the UK on, Trump's vice president also. So there are these political differences, and the Prime Minister and the President will be giving a joint press conference at the end where they'll be probed on some of those issues as well.
And do you expect Nigel Farage or Reform UK to feature at all?
Farage, he might get brought up in that press conference, for example. Farage did go over to the Oval Office and meet President Trump just a couple of weeks ago and got his picture standing next to the president at his desk. They are close political allies, and Trump isn't embarrassed or about the lack of diplomacy that comes with saying that in front of the Prime Minister sometimes. So I would be surprised if he doesn't know.
And so what do you think is the best outcome for the UK, just as we think about this opportunity, I suppose? What do you think will be the images that emerge? Could it be something from, let's say, the First Lady, Melania Trump, who's got her own visit with the Queen, Camilla? I wonder what you think will emerge out of the next few days.
I think this state visit is going to be one of images they want to emerge and one of images they very much don't want to emerge. They are intentionally avoiding the president giving an address to the UK Parliament, as typically happens. Macron gave his own address to the Parliament when he did his state visit earlier this year. I think that's to avoid the president trying to school politicians on their political differences, but also to avoid a major protest outside Parliament. They're still expecting protests. There's talks. There's lots of reports about the heightened security in Windsor. So it will be one. Keir Starmer will want to avoid any of those kind of perilous clashes that are at risk. And he'll want to get those deals, as I said, potentially on steel, on tech, and also to the king will want to give Trump a really good time, charm him, shower him with the pageantry that comes with spending time with the royal family.
That was Bloomberg's political correspondent Ellen Milligan looking at this second state visit from President Trump in the coming few days. We'll have full coverage of this historic event, the visit to Windsor, and more across Bloomberg platforms. I'm Caroline Hepker here in London. You can catch us every weekday morning for Bloomberg Daybreak Europe, beginning at 6 a.m. in London. That's 1 a.m. on Wall Street. Tom.
Thank you, Caroline. And coming up on Bloomberg Daybreak Weekend, a meeting this week at the Bank of Japan. We'll discuss what that means for monetary policy there. That's up next. I'm Tom Busby, and this is Bloomberg.
For enterprise organizations, managing all your food needs is a tall order. But with EasyCater, you get a single workplace food vendor with the tools and resources to make it easy, giving teams across your organization an easy way to order from a huge variety of restaurants, all on one platform. all while consolidating your corporate food spend so you can control costs, streamline billing and payment, and simplify reporting. EasyCater, your business tool for food. To learn more, visit easycater.com/podcast.
Introducing the all-new Adobe Acrobat Studio, now with AI-powered PDF spaces. Do more with PDFs than you ever thought possible. Need AI to turn 100 pages of market research into 5 insights with a click? Do that with Acrobat. Need templates for a sales proposal that'll close that deal? Do that with Acrobat. Need an AI specialist to tailor the tone of your market report to sound real smart in real time? Do that with the all-new Adobe Acrobat Studio. Learn more at adobe.com/do-that-with-Acrobat.
Your next product launch is coming fast. Don't let billing slow you down. Legacy systems can't handle usage-based billing. That means your team is stuck gluing code together, piecing through spreadsheets, and running ad hoc queries just to figure out what to bill. With Metronome, you can roll out new pricing in minutes instead of months, whether it's usage-based, seat-based, or a hybrid model. Visit metronome.com to see how companies like OpenAI and Anthropic launch billing as fast as they launch products. That's metronome.com.
This is Bloomberg Daybreak Weekend, our global look ahead at the top stories for investors in the coming week. I'm Tom Busby in New York. Policymakers at the Bank of Japan convening this week, and most BOJ watchers expect a lift to the benchmark interest rate by January, though some surveyed by Bloomberg see October as the most likely time, given amplified political uncertainty. For more, let's get to the host of the Daybreak Asia podcast, Doug Krisner.
Tom, Japan is now confronting a major shift in the outlook for politics and government policy. The country will soon get a new prime minister following the resignation of Shigeru Ishiba. For a closer look at the terrain in Japan for markets, I'm joined by Mia Glass. She is Japan FX and rates reporter for Bloomberg News. Mia joins us from our studios in Tokyo. Mia, thank you so much for joining me. I think it's fair to say that the BOJ is known for being an especially cautious central bank, and I'm wondering whether you think it's likely that we're going to get any change in monetary policy in the coming week.
Right. Thank you so much for having me. So for the BOJ meeting next week, I don't think there's any chance of a rate hike. I think it's pretty widely expected that there will be no hike at this meeting. But just to set the stage, the Bank of Japan hasn't hiked since January. There was a lot of tariff uncertainty since April, and now there's a lot of political uncertainty after Prime Minister Ishiba announced that he's going to step down. So we have meetings in September, October, and December still of this year, and although there won't be a hike next week, there's still a possibility that the BOJ could hike this year. And we actually had a Bloomberg story this week saying that Bank of Japan officials have the view that it might be possible to raise the interest rate again this year, regardless of the domestic political instability. And that really has to do with the fact that economic data has been really in line with expectations. So although there is still that uncertainty from the U.S. trade deal and the political uncertainty in Japan, BOJ officials do think that there could still be a hike this year. And we had a survey as well that came out that said that most BOJ watchers expect a hike by January. And October is still the most popular timing. It's the proportion of people who expect October ticked down a little bit because of the political uncertainty, but October is definitely still a possibility.
So we know Japan will have a new prime minister soon now that Shigeru Ishiba has resigned. It seems as though high inflation on a relative basis was a big factor in this. Give me a sense of how inflation in Japan has been behaving.
Yeah, so Japan's inflation has stayed at or above the BOJ's 2% target for more than 3 years now. And we even had U.S. Treasury Secretary Scott Bessent said that the BOJ is kind of falling behind the curve in tackling inflation. And that has also been a lot of the reason why JGB yields, particularly on the longer end, are rising so much recently. So that was definitely a part of why Ishiba had such a terrible election in July, and another reason why he had to step down. And so that will definitely be part of the Bank of Japan's mission to tackle inflation and to bring those JGB yields down. So it'll definitely be important to watch to see how the Bank of Japan is going to signal next week about their rate hike path.
You mentioned JGBs a moment ago, and I know we have an auction of 20-year JGBs coming up in the week ahead. I'm curious, is there a way to gauge right now what the market appetite may be?
Yeah, so recently we've been having better auctions than we have in the past. So a lot of this attention on auctions really started back in May when we had a really bad 20-year auction, the worst demand in more than a decade, and it really sent global yields higher. So basically since then, there's been a lot of attention on these auctions, and particularly in the longer end, this is going to be the first super long bond auction since Prime Minister Ishiba announced his plan to step down. And with all the concern in the bond market about fiscal policy and political uncertainty, it's going to be really important to watch that 20-year auction and see if there is demand there to gauge how the bond market is feeling about the political situation.
Talk to me a little bit about this new chapter in Japanese politics and what it may mean for the way in which the Bank of Japan operates going forward.
Yeah, so the leadership election for the LDP is set for October 4th, which is kind of a tricky timing for the BOJ. I mean, they have their after September, their next meeting is going to be in October. So it's really tricky timing for the BOJ. And it really depends on who becomes the new prime minister. So we're looking at a couple leading contenders. So we have Sanae Takaichi, who favors stimulus measures and would also likely prefer the BOJ to take a more cautious view on rate hikes. And then Shinjiro Koizumi, he's another potential candidate, but he would most likely just continue with the current administration's views, and he would support raising interest rates. So depending on who comes into office, we could have a drastic change in, how the BOJ operates. So I think the political situation would be really important to watch. And as you mentioned, globally, this is a really important time to be watching politics for the bond market. We have political turmoil in France, and then in the US, we also have concerns about the Fed's independence. We also have the tax cut and spending bill. So that's sending globally long bonds higher. So it's not really just a problem in Japan. It's happening all around the world.
Okay, Mia, before I let you go, talk to me a little bit about how tariffs that were put in place by the Trump administration, how they have been impacting the Japanese economy.
Right. So President Trump signed an executive order implementing the trade agreement with Japan, and that's a maximum 15% tariff on most of its products. That includes automobiles, parts. And so the deal also includes this promise that Japan will create a $550 billion U.S. investment fund. But there's a bit of a disconnect between what Trump thinks of that investment fund versus what Japan thinks of it. So Trump has previously said that $550 billion investment fund will be money that his administration could invest as they like, with 90% of the profits being given to the U.S. by Japan. Versus Japan kind of sees it as more of a combination of investments and loan guarantees. So there's a bit of a disconnect there, and the market is really uncertain about how that's going to play out. And of course, if that really is how Trump's saying it's going to be, then that's going to impact the economy. That's going to weaken the yen. So it'll be really important still to watch how that plays out. There's a lot of uncertainty there. The trade deal obviously also matters because Japan is really an export-driven economy. So we've seen export value decline, but volume has risen, which shows that a lot of car makers have been cutting prices while maintaining the volume of their exports to the U.S. So they're sacrificing those profit margins. And the impact of the tariffs has been limited a bit on the GDP of Japan. So Japan's economy is still growing, but I think a lot of economists are saying that we could still see the impact from tariffs play out on Japan, so that'll be an important area to watch for the BOJ as well.
Okay, Mia, thank you so much. We'll leave it there as we look ahead to the BOJ meeting next week. She is Mia Glass, Japan FX and rates reporter for Bloomberg News, joining us from our studios in Tokyo. Staying in Japan, we turn next to politics and the resignation of Shigeru Ishiba. This came after back-to-back losses that cost his Liberal Democratic Party its parliamentary majority. Now, in a column published last week, Bloomberg Opinion's Garode Reedy characterized Ishiba's ascent as a gamble. I had the chance to speak with Garode and began by asking him whether Ishiba's resignation came as a surprise.
I think the only thing that was surprising about it was how long it took. It's 7 or 8 weeks since the upper house election defeat. That, as you say, is the second major defeat, indeed the third major defeat that Ishiba had as LDP leader, in addition to the lower house defeat last year and the Tokyo Assembly election earlier this year. As you say, Ishiba was Ishiba was brought in to fix a problem, and the problem was the LDP's declining popularity. That was under the previous Prime Minister, Fumio Kishida. Ishiba was brought in as a new face, a new lick of paint on the party. He wasn't tainted by any of the scandals, nor should I say actually it was Kishida, but Kishida was the one who was sort of like handling them, so he kind of became associated with them. Ishiba was quite scandal-free, clean politician, believed to be popular, but when he came in, he did not see the actual bounce in approval ratings that we would associate with a new leader coming in. And ultimately, the LDP is a large organization, and what they are there to do is to win elections, and what the leader is there to do is to win elections. Ishiba proved that he couldn't do that, and as I say, the only surprising thing is that he didn't go earlier. He dragged it out a little bit longer than, frankly, I think it needed to.
Maybe you can help me understand the possible successors to Ishiba. Are there any obvious candidates?
The two leading candidates at the moment, I should say it's very early in the day. We had, if memory serves, 9 candidates last year in the race that eventually was won by Ishiba. The two leading candidates would be the people who came second and third in that election last year. That's Sanae Takaichi and Shigeru Koizumi. Takaichi first, if she became the leader and then was elected prime minister, it's quite likely, but no longer guaranteed because the LDP is no longer the largest party in the lower house. She would become the first female prime minister in Japan. She is a self-declared heir of Shinzo Abe and his politics and his Abenomics policies. She is, we should say, she's definitely very popular with the right wing, and especially with people who did not like Ishiba. They really represent two poles on either side of the party. So she's definitely a leading candidate. I would say she finished second in the runoff election against Ishiba last year. And what you saw was basically concern that she might have rather similar flaws to what Ishiba turned out to have, in that she only appeals maybe to one section of the party, and that in her case is the right wing. The other candidate, as I mentioned, is Shigeru Koizumi. He's the son of the former Prime Minister Junichiro Koizumi, who listeners might remember was Prime Minister in the early to mid 2000s, while George W. Bush was the president in the US. He's very young, he's a little inexperienced, but he has had quite an impressive year. He came in as agriculture minister early on this year to deal with the rice prices that I mentioned earlier, and very immediately and effectively was able to generate a downturn in rice prices by changing how the country was releasing its reserves of rice. That will have certainly won him some plaudits. He's believed to be quite popular with the public. He's very, he's young, he's good looking, he's charismatic. He has a celebrity wife and a young family. So he has a lot of things going for him. Those would be the two leading candidates, I think, at the moment.
That is Bloomberg opinion columnist Garode Reedy. And I'm Doug Krisner. Catch us weekdays for the Daybreak Asia podcast. It's available wherever you get your podcast. Tom?
Thank you, Doug. And that does it for this edition of Bloomberg Daybreak Weekend. Join us again Monday morning at 5 a.m. Wall Street time for the latest on markets overseas and the news you need to start your day. I'm Tom Busby. Stay with us. Top stories and global business headlines are coming up right now.
How many vendors does it take to meet all your organization's food needs? Just one. EasyCater, the workplace food platform that lets teams order from a huge variety of restaurants, over 100,000 nationwide, all through a single vendor. In addition to all that variety, EasyCater also gives you full visibility of your organization's food spend with invoicing, centralized reporting, and seamless integration with expense management systems, all on one platform. EasyCater, your business tool for food. To learn more, visit easycater.com/podcast.
Wells Fargo announced a new $20 million program in 2025, teaming up with nonprofits to support small business owners. That's how Wells Fargo is helping strengthen small businesses and communities. Wells Fargo, the bank of doing. Learn more at wellsfargo.com/say-do.
Fox One is now live. It's the new way to stream all your Fox favorites all in one place. That means NFL Sundays and college football games, breaking news with the Fox voices you trust, and your favorite shows streamed as they happen so nothing gets spoiled. With Fox One, you get it all live. Edge-of-your-seat plays, jaw-dropping moments, and that feeling like you're right there in the action. Start your 7-day trial today. Offers are subject to change. Go to Fox One for complete terms and conditions. Fox One, we live for live. Streaming now.